Teacher, UAE's biggest classroom.
Hi viewers, so welcome to my teachers program. So today I am going to take cash flow statement. So in this chapter, you know the importance of this chapter, cash flow statement and meaning and importance and objectives, and also the advantages and disadvantages of cash flow statement, and different components and parts of cash flow statement and applications of cash flow statements. So these are the main points today what I am going to discuss. You know that this cash flow statement for our project, this is a very important part, and also you know our project total mark is 20, and out of that 6 mark is for cash flow statement, and 6 mark is for accounting ratios, and 4 mark is for Viva, and 4 mark is for our project work. See, we are already completed now 2 projects. So first one is known as comprehensive project, and the second one is known as specific project. But specific projects contains 2 parts. So number 1, accounting ratios, and the second part is known as cash flow statements. All together, so you supposed to get 4 marks. That is, project total mark is only 4. And the second part is known as Viva. You know that the external teachers are coming from different schools and they are asking questions, and that is what is called Viva part. And the remaining 12 marks we can expect from accounting ratios, that is 6 mark, and cash flow is 6 mark. Total is 12 marks. So all together we supposed to get 20 marks from second part. So cash flow statement and accounting ratios and project work and Viva part. Now you know, so after our winter vacation, our project and practical examination will continue, and also along with that our pre-board will start. I think already some schools are now conducted pre-board examination, and also after winter vacation maybe 10th or 11th or 12th onwards, you know, we have a model examination also. So here you know that the cash flow statement in the board, they are asking 1 question or 2 questions from this chapter, that 6 mark 1 question sure from this cash flow statement, or 1 or 2 marks for theory part also you can expect from these cash flow statements. So now we can come to our point. So what is actually cash flow statement? I think 2-3 years before, 1 mark 1 question came from this chapter. The question is as follows. The question is like this. So what do you mean by flow under cash flow statement? You know the chapter cash flow statement. So here you can see what do you mean by flow under cash flow statement. So here flow means what? So very simple, flow means the movement of the cash. You can see the cash flow statement, or in business the movement of the cash is there. Cash is coming inside the business, and also cash is going out of the business, and different sources we are getting money, and also different applications we are meeting expenses or we are paying money also. So here flow means the movement of the cash. See, answer is very simple, you know, we got 1 mark. So what do you mean by flow under cash flow statements? See, answer is flow means the movement of the cash. So cash inflows are there and also cash outflows are there. So what do you mean by cash flow statements? See, answer is it is a statement which discloses, it is a statement which describes cash inflows and outflows of the business is known as cash flow statement. During a particular period, the movement of the cash, that means cash which is coming inside the business and also the cash which is going out of the business, or otherwise what are the sources of cash and what are the applications of the cash. So that particular statement during a particular period, that particular statement which is prepared by a businessman or an accountant, that is what is called cash flow statement. It is a statement which discloses the movement of the cash and cash equivalent during a particular period is known as cash flow statement. So it is now clear what is actually cash flow statement. You can see it is a part of management accounting. So we have studied financial accounting and cost accounting and management accounting, and cash flow statement, normally this part is coming under management accounting. Any form of accounts which enables business to be conducted more efficiently can be regarded as a management accounting. MCOM classes you will study management accounting. So there we can see that these all points elaborately or detailed we are going to study in higher classes, but here 11th 12th standard we are getting little. So what do you mean by cash flow statement? And also the previous ICSE syllabus you can see fund flow statement also there, but CBSE syllabus fund flow statement is not there. Now we are studying only cash flow statement. So again I am coming to the point. So what do you mean by cash flow statement? See, as I already explained, cash flow statement means it's the flow of the cash which is coming inside the business as well as the cash which is going outside the business, or otherwise the applications and sources of the movement of the cash during a particular period is known as cash flow statement. And also now we can see, all of you please look at the monitor. So once again, so what is the meaning of cash flow statement, which is already given there? So cash flow statement is a statement that shows the flow of cash and cash equivalent during a particular period. During a particular period, or here one doubt is there. So what do you mean by cash equivalent? Cash and cash equivalent. So cash equivalent, give 3 examples for cash and cash equivalent. This is also one board question. So give 2 examples for cash and cash equivalent. Means cash in hand, cash at bank, marketable securities and short-term investment. This all coming under cash and cash equivalents. So here what do you mean by equivalent? Which we can convert it into liquid money as early as possible, which we can convert it into a cash as early as possible. There we are using the word is known as cash and cash equivalent. So cash flow statement is a statement that shows the flow of cash and cash equivalent during a particular period. So that means cash flow are either inflows and outflows of cash and cash equivalent. And also you can see that the transactions that decreases cash and increases cash, the transaction that decreases the cash and cash equivalent and transactions that decrease the cash and cash equivalents are outflows, whether it is increase or it is decrease, and this is what is called cash and cash equivalents. So next, cash and cash equivalent signifies both cash and cash equivalent like bank balances, marketable securities and short-term investment, etc., etc. This is what is called cash and cash equivalent. So once again, so just to see, the cash flow statement is a statement that shows the flow of cash and cash equivalent during a particular period. The cash flow statements either receipts are there and also the cash outflows are there. And cash equivalent means the which we can convert it into liquid money as early as possible. So there we are using the word is known as cash equivalent. Example is cash in hand, cash at bank, and also the short-term investment and marketable securities. This all coming under cash and cash equivalent. So now you can see the cash flow statement have 3 components. See what are the different components of cash flow statement. That also very important thing, that is AS bar 3. AS bar 3 of the Companies Act. So Companies Act 2013, not 1956. So you know that the new version is there. As per AS bar 3 of the Companies Act 2013. See what are the different components of cash flow statements. What are the different parts of the cash flow statement. Cash flow statement have 3 parts. See, all of you look at the monitor. See, cash flow statement have 3 parts. The first one is known as cash flow from operating activities, and the second one is known as cash flow investing activities, and third one cash flow from financing activities. You know that this is a very important thing, and there are 2 methods to prepare the cash flow statement. So that is the direct methods are there and indirect methods are there, but as per our new syllabus we are following only indirect methods, and as per that method the cash flow statement have 3 sections. So first one is known as, or 3 components are there known as operating activity and investing activities and financing activities. The cash flow statement have three sections, that is cash flow from operating activities, and cash flow from investing activities, and cash flow from financing activities. So these are the different components of cash flow statements. Now first point we have studied, what do you mean by flow under cash flow statements? Answer is, flow means the movement of the cash. And the second point we have studied, cash and cash equivalent. Cash flow statement is not an account. It is a statement which discloses the movement of the cash and cash equivalents. So cash equivalents, what are the documents are coming? Or cash and cash in bank, and also short-term investment and marketable securities are coming under cash and cash equivalent. And the third point is, so how many methods are available to prepare cash flow statement? There are two methods, that is a direct method and indirect method. But as per our new syllabus, they are deleted direct method, but we are studying only indirect method. So that is the details I will give. So now you can see what are the different components of cash flow statement, parts of cash flow statement. This is coming under AS Part 3 of the Companies Act 2013. Then cash flow statement have three parts, operating activities and investing activities and financing activities. Now you can see what are the main objectives of this cash flow statement. What are the main objectives of this cash flow statement? So the students are doing the problems, but they should know why we are preparing this cash flow statement, what is the importance of this cash flow statement, and what is the basic difference between cash flow statement and income statement, why we are preparing, and what is the main motivation behind the preparation of this cash flow statement. So that I am going to discuss. Now the main objectives of cash flow statements are as follows. So number one, to ascertain the sources, means receipts of cash and cash equivalents under operating, investing and financing activities by the enterprises. Now it is clear the main objectives of cash flow statement. The point number one, to ascertain the sources of cash and cash equivalents under operating, investing and financing activities by the enterprises. The sources, we are discussing the operating activities. The objectives of cash flow statement, number one, to ascertain the sources of cash and cash equivalents through operating activities and also the investing activities as well as financing activities by the enterprises. That's the first point. And the second point, you know that the main objective of the cash flow statement, the second point, to ascertain the applications of cash, to ascertain the applications of the cash and cash equivalent under operating, investing and financial activities. The first point we are discussing the main sources, and the second point now I am discussing the applications under operating, investing and financial activities by the enterprises. And the third point, to ascertain the net changes of cash and cash equivalents, being the difference between the sources and applications under the three activities between the data of two balance sheets. So now this is very important. And finally we want to find out net increase and decrease of cash and cash equivalent between the two data of two balance sheet, between the data of two balance sheet. So now listen once again, what are the main objectives of the cash flow statement? So we want to find out the sources of cash under operating, investing and financing. And the second point is we want to see the applications of cash and cash equivalent under operating, investing and financial activities. And the third point is to ascertain the net changes in cash and cash equivalents, being the difference between the sources and applications under the three activities between the data of two balance sheets. So these are the main objectives of cash flow statements. The next point, so the businessman is preparing this cash flow statement, or for us, what is the importance or uses of this cash flow statement? With the help of this cash flow statement, now listen. So last year we have studied, we are preparing a final accounts, trading and profit and loss account balance sheet, and also we have studied income and expenditure accounts, and also we have studied bank reconciliation. Now we have studied dissolution like a revaluation account, realization account, and also we are preparing the debentures account. So like that, you know. So what is the importance or uses of this cash flow statement? who is using this cash flow statement? What is the use of this cash flow statement? So the point number 1 is, now listen, this after discussing all these points, it is very easy to understand or easy for the students to do the applications. That is why elaborately I am giving this explanation. So importance or uses of cash flow statement. Number 1, you can see short-term planning is possible. The businessman can make out lot of planning, like a short-term planning. So what do you mean by short-term planning? Because you know the movement of the cash, the cash is coming in, and what are the different sources we are getting the money, and what are the different applications are there, and on the basis of that the businessman or the entrepreneur can take out lot of decisions, like the short-term business planning is possible. And the second point, the cash flow helps in assessing the liquidity and solvency. So what do you mean by liquidity and solvency? That means with the help of cash, so we are able to pay the liabilities or not. And with the help of this cash and cash statement, we are getting we can take out the decisions about the solvency of the business unit. That means the business is able to pay their liabilities or not. That also we can find out, where we can ascertain with the help of this cash flow statement. So point, the importance or uses of this cash flow statement. Point number 1, short-term planning is possible. The entrepreneur as well as the businessman can take out lot of planning, like short-term planning. So business, financial planning, whether we want to take any loan or not, or we can pay the money or not, and what are the different sources we are getting the money, and also what are the different applications are there in future. This all we can find out with the help of this cash flow statement. And the third point is, efficient cash management is possible. You know that board of directors can control the board of directors can control the cash receipts and as well as cash payments with the help of this cash flow statement. And yet another important points of this cash flow statement is comparative study is possible. That means in other way, inter-firm or intra-firm analysis is possible. So what do you mean by inter-firm and intra-firm analysis? So with the help of this cash flow statement, inter-firm or intra-firm or intra-firm comparison is possible. So that means last year's statement and current year statements. So we can compare it, and on the basis of that the managements can take lot of decisions, and we are coming to the conclusion. So what are the drawbacks and what are the defects of our planning? So that is why comparative study is possible. And also the percentage of changes and absolute changes, or what about the changes in the current year and base year, and so that comparative study is possible with the help of this cash flow statement. And again number 5 reasons for cash positions, and test for the management decisions and dividend decisions. Test for the management decisions. So that means it is an important tool to the management for taking decisions. This point is very important. Even your business studies, you are studying this point. Test for the management decisions. That means, so we can evaluate the efficiency of the management also. So what are the, whether it is a wise decision or not. So suppose you are taking a loan from the bank. So that decision which is taken by the board of directors. So we are getting any returns, and out of that amount you are invested outside the business, or we are getting any returns or not. So that means like you are taking lot of wise decisions. Test for the management of decisions. And also in other ways we can say this is an important tool to the management for taking lot of decisions. So the last point, you know, dividend decisions. So that means, what do you mean by dividend decisions? So you know, shareholders are giving dividend every year. The financial business studies second book we are studying, different decisions are taken by the financial managers. So financial decisions are there, and out of that one dividend decision also taken by the board of directors. So every year we are allotting, or every year we are giving dividend to the shareholders. And what about our cash flow, the movement of the cash? We are giving dividend to the equity shareholders depend upon our dividend decisions. So the board of directors will consider, or we will analyze our dividend decisions on the basis of this cash flow statement. Now you are So you are getting the point. So once again, what is the importance or uses of this cash flow statement? So cash flow statement, with the help of this cash flow statement, short-term planning is possible, and cash flow helps in assessing the liquidity and solvency, and efficient management of cash is possible, and inter-firm or comparative study is possible, and also the reasons for the cash positions, and test for the management decisions and dividend decisions. So these are the different importance or uses of this cash flow statement. This is a very easy point, so that's why elaborately I am not going to the deep side, but this is all points you have studied in 11th standard onwards, and because advantages and what is the importance of accountancy, that all we have studied. Similarly, this all theory part you know very well. Now we are coming to the minus or negative points, and what are the limitations of this cash flow statement. So far what I discussed the positive points. Now we can see what are the drawbacks of cash flow statement. Even accountancy have a lot of drawbacks. So like our cash flow statement also have certain demerits or limitations are there. So the first limitations of cash flow statement is non-cash transactions are totally ignored. So that means, so far what I said, we are considering the cash movements, the flow of cash only. Whether the cash is coming, the sources of cash, and as well as the applications of the cash. And what about the non-cash transactions? That also equally important to the businessman. But why we are not considering this non-cash transactions? I will give an example. We are purchasing a building by issuing a shares. We are purchasing a building by issuing a shares, and also the assets purchased for consideration. So that means, so these type of transactions we are not considering. Non-cash transactions are totally ignored by the businessman at the time of preparing the cash flow statement. So that is the basic limitations of the cash flow statement. Now I have already explained a lot of advantages are there, but simultaneously when we are preparing this cash flow statement has certain limitations also. And the second point, you know that it is not a substitute for an income statement. So it is not at all a substitute document. The students have some doubts. Sir, we are already prepared this trading account, profit and loss. Then why we are preparing this income statement, and also we are studying non-trading concern, income and expenditure account. Then what is the use of the preparation of this cash flow statement? But there I am clear. See, it is not a substitute for our income statement. So income statement is different and cash flow statement is different, and each statement have its own merits as well as demerits are there. So we are not, it is not a substitute for income statement. Income statement like a profit and loss is different, or income and expenditure account is different, and cash flow statement is different. Don't think that this all the statements are the same or all these accounts are the same. So that is absolutely, it is wrong. So it is not a substitute for an income statement. And the last point is, it is a historical in nature. No difference is there. We are getting some information, and on the basis of that we are doing. So we are not considering the non-cash items, and also a lot of defects, and with the defects we are preparing this cash flow statement. Then like it is a historical nature, so that is the same thing we are continuing. And sometimes fundamental accounting concepts we are ignored also. That means accounting accrued concept, some concept we are ignoring at the time of preparing the cash flow statement. Some fundamental accounting concepts are there as per our accounting standard. That accounting standard concepts we are ignoring at the time of cash flow statement. Is just like a window dressing. And assessment of the liquidity. So assessment of the liquidity also, the advantage I have given, with the help of this cash flow statement, easily we can ascertain the solvency of the business, but we are considering only cash and cash equivalents. Then what about other items? We are not considering all the liquidity and solvency of the business unit. We are considering only cash and cash equivalent. So that is also a serious defects of this cash flow statement. So once again, just look at the points. See, what are the limitations of cash flow statement? So number one, non-cash transactions are totally ignored. we are preparing only the cash transaction sources and applications. And the second point, it is not a substitute for income statement. And third point, it is like a window dressing. It is historical natures are there, and the fundamental accounting concepts include an assessment of liquidity is not possible with the help of this cash flow statement. So now listen once again. See, we have studied now lot of points. So first point is, what do you mean by cash flow statement, and what are the main objectives of the cash flow statement, and what are the different components of cash flow statement, and these are the points what we have explained so far. Now listen, cash flow statement have three parts. That means the operating activity and investing activities and financial activities. And what are the main objectives of cash flow statement, and what are the advantages and disadvantages of cash flow statement. Now we can see, as I already explained, the cash flow statement have three parts. Now we are coming, slowly we are coming to the practical side. Classification of business activities as per AS-3 revised under inflow and outflow of cash. As per AS-3 of the Companies Act 2013, see what are the items which is coming under operational activities. You can see from the monitor. See, all of you please check. The parents, the students who are watching my programs, just look at the operational activities, cash inflows and cash outflows. So you can see cash sales are there, and cash received from debtors are there, and cash received from commission and fees, royalties, and also the outflows, cash purchases. We are purchasing building. So cash outflows are there, like cash purchases and payments to creditors and cash operating expenses and the payment of wages and income taxes. So these are the item which is coming under operational activities. So now we can see the second part, investing activities. So cash flow statement have three parts. The first point or first part is known as operating activities. The second part is investing activities. Now what are the items which coming inflow under investing activities? Sale of fixed assets. We are selling a building, we are selling a machinery, so we are getting the money. That means cash inflows. And sale of fixed assets and sale of investment, interest received and dividend received. These all items are coming under cash inflows under investing activities. Now you look at the outflows, purchase of a fixed asset and purchase of investment. We are purchasing a building, cash is coming in or going out, so cash is going out. It is a part of applications, purchase of fixed assets and purchase of investment. So this is coming under investing activities, but it is a part of outflow activities. And once again, investing activities inflows are sale of fixed assets and sale of investment and interest received and dividend received. And the second part, investing activities, cash outflows are purchase of fixed assets. When we are purchasing a building or equipments or a machinery, see whatever it is, so cash outflows are there. That means outflow of cash. And purchase of investment, you are purchasing the investment, you can see it is a part of outflow. And again one more point, see the point, how certain clarifications are there, or the students level certain doubts are there. That is goodwill. You know that goodwill is written off is there and goodwill is increasing is there. So goodwill is increasing means we are purchasing goodwill. When we are purchasing goodwill, cash is gone out, it is a part of applications. But goodwill is decreasing means it is a goodwill is written off or it is reducing. So it is a goodwill written off or writing of a goodwill, or it is coming under operating activities. And goodwill is increasing means we are purchasing goodwill, that is a part of investing activities. Now I already explained 2 points. One is operating activity and the second point is known as investing activities. And third, you can see very important point, financing activities. See, all of you please just go through the monitor. Financing activities. So financing activity also, we are getting some money and also we are paying certain money. So inflows and outflows are there. According to accounting terms, we can use the word inflows and outflows. See, just look at the inflows under financing activities, issue of shares in cash. When we are issuing the shares, we are getting the money. That means proceeds of shares. And issue of debentures in cash. When we are issuing the debentures, we are getting the money. And next point, the proceeds from long-term borrowings. We are taking a loan from the bank, we are getting the money. That is what is called the proceeds from long-term borrowings. This all coming under cash inflow under financing activities. Then just look at the outflows, the payment of loans, the redemption of preference shares, buyback of equity shares, and payment of dividend and payment of interest, etc., etc. Interest paid and the dividend paid, and also you are redeeming the preference shares and you are giving back the loans or redemption of a loan or repayment of a loans. So cash is gone out. Now you can see these are the items which is coming under operating as well as financing and investing activities. And once again, just look at the monitor. See, classification of business activities as per AS bar 3 of the Companies Act 2013. See, all my students, please look at the monitor. So this is the operational activities, you can see the items. And also the second point, you can see investing activities, inflows and outflows. And third point, financing activities and inflows and outflows. So now listen, now we are coming to the practical side. So next point, what is the format of this cash flow statement? You can see this is the format of cash flow statement. The following format of cash flow statement is in accordance with those items of financial statement which are to be evaluated for board examinations. So you can see these are the format of cash flow statement. It's the calculation of net profit. Then so first you take a statement of profit and loss account, then add with the general reserve, then again add with the current year dividend and also provision for tax. So now we find out the net profit, then afterwards cash flow from finance. So just look at the monitor. So cash flow, this is a format, cash flow from operating activities. First you find out the net profit as well as net loss. So when we are calculating net profit and net loss, details we supposed to give. So how to calculate this net profit and net loss? So we are getting a balance sheet of 2 years and we are comparing, and on the basis of the current year and also the previous year we are comparing, and on the basis of that we will calculate the profit. And along with the profit we can add reserve, and also we can add a dividend, and also we can add this provision for tax also. Then we are look at this monitor, see what all the items we are putting in the operational activities. So profit before, then items to be added, which all items we are adding, and you can look at the monitor. So elaborately I had given, and first part operating activity and the second part is known as investing activities. Then you can see the financing activities. Then A part is known as operating, and B part is known as investing, and C part is known as financing. And finally, you know, operating activities, that is A, and investing activities, that is B, and financing activities C. And finally we are supposed to find out A plus B plus C or A minus B plus C. It is dependent upon the question. Suppose investing activity you are getting a minus figure, you should minus. If you are getting a positive figure, you should plus. So my formula is A plus B plus C plus opening cash and bank should tally with our closing cash and bank. The examination hall itself you can find out your answer is correct or not. So that means we are preparing finally the cash flow statement, and on the basis of that we will calculate the cash flow statement. So A means operating activity, and B means investing activity, and C means financing activities. A plus B plus C plus cash and cash equivalent should tally with our closing cash and bank balances. So the examination hall itself we are getting our answer, whether you can check your answer is correct or not? Now listen, this is a time for breaks, so have a short break.